And we're gonna, so under tools instrument manager, we're gonna hit TF, we're gonna hit search, we're gonna click on the instrument, because that's the one that we want to make sure is on default 24/7. We're gonna click edit, and see, I do have it set to session template default 24/7. If you look at it right now, you're probably seeing like CME US futures, either RTH or ETH or something like that. So if you set that to default 24/7, right here in the instrument manager, it'll automatically do it by default, and you won't have to manually select it when you add multiple time frames. You won't have to manually select it every time you make a new chart, and it gets really old really quick. So, and that's required for some of the indicators, because if you don't have that continuous flow of data, then you're like throwing data out the window, and that can mess up your indicator settings. So we actually require it in order to ensure that users don't make mistakes. So now we're gonna go over to indicators. We're gonna add on just the MVPs, just to be able to look at this real quick. Okay, so 1, 2, 3, 4, and then I'm gonna change this to the 2-minute, the 3-minute, and the 4-minute. And one thing I want you to notice is that I have the indicator set for the panel to be the same as the input series. Now you can manually choose the panel, but if you change panels and do stuff, it's really annoying. So if you want to really automate your processes, always make sure when you have an indicator, instead of using what panel you want it on, unless it's going to be on its own panel like Confluence is, that you set it on the panel to be the same as the input series. Okay? And again, that will make things a lot easier for you going forward. So yeah, so Confluence right now is still only on a single chart. We are working on making a multi-data series one. It's not our code. It's actually how Ninja. This is a drawing versus like an indicator, and the way it does drawings and the issue with drawings on multi-series charts in their own panel, all this other weird stuff. But Ben has a solution, and he is coding it. So we're basically gonna have a Confluence that looks pretty like this one, and we're gonna have another Confluence that still looks good, but it'll be more of a histogram type with multiple bars on it. That'll be a Confluence multi-data series. It'll be called Confluence Multi. So we're hoping to have that out soon. All right. So now that we've added those 4, I'm going to click OK. Now there's an error in what I'm doing, and I'm doing it on purpose because I want you to be able to see it. And I want you to understand what the Confluence indicator means. Okay. And by the way, I do use Confluence on elite charts as well. So it's not something I just use over on time-based charts. And it's very helpful. So it'll basically let you see a lot of information at once. This is a lot cleaner, I think everybody would agree, than looking at all this information over here. So looking at 4 different charts versus looking at one chart. And then, somebody has a question. They're having an issue validating their license. Okay, anytime you have that issue, the reason is, now this is assuming that you have a valid license, okay? And I know you do, Mike. So the reason for that would be because you have left an expired futures contract inside of your workspace. Because remember, one of the things I always say is always update your rollovers on futures on Fridays. And it's a Ninja issue. It's not us. So we don't know what instruments you have or don't have. But that's what can lock it up. And so if you left that on there, that's why it locked. And so it doesn't matter I have a 5-minute chart. I could have a 5, 10, 20, 15, 100. It doesn't matter what size this chart is. I can even do this on a diagnostic chart. So we're talking about in here is the beta, the 1, 2, 3, 4, and the 1, 2, 3, 4. Okay? So we'll come back to, we can change it to 4 if that, makes you happy, but that's really not not even teaching that. Right now I'm just teaching what is Confluence. So the way that you fix that, I want to go over this because I know this happens pretty much every month about this time because a lot of people have oil on their charts and oil rolls over every single month. And what they do is they leave oil in there, they don't roll it over because maybe they haven't been trading it in a while, but they still have it like in a workspace, or they have it in an analyzer, or they have it in a DOM, or they have it in a chart. And you want to make sure that you've removed it from everything. You've removed it from your default instrument list. You've removed it from like everything that you have, because otherwise you'll get that lockup issue. And pull it up. Let's see. That's the only reason it wouldn't validate. And so let's see here. Let me pull up the. If you're having a license validating issue, let me go in. And 99.99% of the time will be. Where's this at? Okay. And I believe I have this in here already, but I'm going to add it right now under our forum. I'm sorry to go off on a tangent here, but this happens like all the time. So that's why I want to bring it up here. And under, let's see, structure. So I'm going to put it under Apex indicators. And then we're going to add I'll add a subform in a little bit. Okay. So I'm posting it right now. Obviously make sure, you do not have your data feeds. This is a big thing. I'm in NinjaTrader 7. Do not have your data feeds connecting on startup. That can cause, this will actually help you with this issue and other issues. So make sure you always connect to CQG first and then FXCM. The number one reason that it will seem to freeze, and it's partially open, and of course our license thing is open and spinning, and so it makes it look like it's the license thing, but it's actually the expired oil contract, which means probably what it means is you have CL 0314 in there or something like that. And you just go to My Documents Ninja Workspaces and delete the underscore workspaces file. It's like right here under Documents. Then we'll go down to NinjaTrader. We'll go down to Workspaces. That file right there. Now you can go in and edit it and take out 0314 and change it to 0414. If you want to manually edit the file, it's a little bit more, technical difficulty. Or you can just delete that file. You can even delete the file, open it, and replace it or whatever. But probably want to delete the file, and then go to Tools, Data Connections, edit any data connections you have, because immediately to not start up on. Do it, and then close and restart NT7, and your workspaces should load just fine. And then you need to remove out any expired futures contracts and save the workspace. So again, I posted that under NinjaTrader Tech Support. We're going to put about 6 different just common little things that happen in there. And let's see here. But that should solve it for you like right now live. Okay? And then I'll save that in there. But that's literally pretty much what always causes that to happen. Okay? If you get that your indicators, that's another good one. So we can add that one in. We'll get a whole list of these going. But like what Steven's saying, and so what we'll start adding these in here, and these are just common things that happen when people do them. But like license won't validate. Okay. Then the other now that this isn't a license not validating issue. This is a like frozen workspace. License won't validate. You can restart Ninja Trader 7. You can restart your PC. Okay. What should make that 2? So in 1, ensure subscription with Apex is active under the questions profile tab above. 2, restart Ninja Trader 7. 3, if necessary, restart your PC. We can actually add one more. Yeah, actually, if that happens, then you're gonna have to restart a D7. Okay. 4, ensure only on 2 PCs. 5, request help in the help desk. All right, so these are basically, it's real simple, but that's how you solve it. We can go through and do a whole little webinar just on how to solve basic tech support issues. But yeah, if you'll do those things, that'll usually wrap any of those up for you. Regarding the connectivity thing, if you'll go over here to account connections and say click on your account and then go to next right there. So where it says connect on startup, that's what needs to be unchecked. So most technical issues that you have, if that is checked, are very difficult to solve without forcing a restart or reload or whatever. If you'll not have that checked, you'll save yourself a world of pain. And everything will load faster. So, also don't, this is another big thing. And I talk about this again in the whole like setup webinar. So if you haven't watched the MVP setup, I definitely recommend that. But when you close your workspace, you need to have a blank workspace. Okay. When you close Ninja, nothing should be open. So when you open it, it'll open up fast. You'll then connect it to your data feeds. You'll then open your workspaces. Do not close your workspace. Do not close Ninja with all your workspace and all your charts open. It is much faster to open Ninja, connect to data, and then open workspaces. It will load faster. It will save all sorts of issues. It may seem like a big progress, but it's a lot easier. Okay, so we got that. Let's get back on topic. I do apologize. But those are things that will save everybody a lot of frustration. I know technical things can probably be one of the biggest challenges that traders can face when working with a new platform or a new trader or whatever. And you're like, I just want to trade. I don't want to deal with stupid chart issues, So trying to help you not have to have that pain. And let's see here. Let's see. Okay. So one of the next things that we want to do over here is let's go in and let's look at the MVP indicator because I want you to understand sort of what it is and how it works. And let's see. Okay, we got that on always on top. So update our data here real quick. Just walking through all that. All right, then I'll connect to my Forex data over here. Once that's connected, it'll load up all the data. And now I'm recording and I have multiple webinar screens up and everything else, so it obviously is taking up a little more resources at the same time. And then this one's loading back like 125 days. See all the data it's loading? So that takes longer because I have to load all that data. So once it loads it all, it'll have it open up. You just got to be patient, let it open up. Once it gets all the data caught up, then you'll be good. Okay. And might have a lot of other charts also. Okay. So now we got everything up. We got it all running. Now on this MVP Confluence, what does it mean so you're reading it properly, and what error do I currently have? Okay, that's one of the big things I want to go over with you. Is there's an error in one of my settings that'll make saying something seem off. So I want to find a good example of that. Let's see here. All right. So that let me just find one example of the supposed error. Okay, see right here on the 1 minute section. Let me add the toolbar shortcut. All right, see here on the 1 minute section how I got a short MVP, but I don't have any kind of short MVP like over here on Confluence. And to make this a little more clear, I'll highlight what I'm talking about. Okay. Add the toolbar over here. Okay. And why is that? Who can tell me why I have a short MVP on the 1 minute over here, but I don't show a short on the confluence indicator on the right side? Three and 10. Okay, perfect. Good. So, yeah, that's exactly why. So if we go again back over here, just to make sure everybody has seen that and understands what we're talking about, what's happening, right there. It's like right over here, that same time frame. See, we're not showing it. Let me turn the global crosshair back on. Control Q, right? Control G. Okay. Like so, right there, you can see sort of the crosshair lines up. So we're not seeing that section right here, down here. Let me get a little rectangle. This little line right here should be red. It's because my 1 minute's not lined up. I only bring that up because you'd be surprised how people are like, "Oh, it's broken. There's something wrong on the 1 minute. The confluence isn't working." Change it to 1 minute should be 10 and 3. And again, this is in the MVP setup video. But if you click 10 and 3, let's see, on 1, and then we have to reload everything. And then over here, reload everything. And now, we'll do it on the other side too. But so I'm going to rebuild it now using the correct ones. So new, we're going to be on high-low. We're going to be on 10 and 3. Okay, now that's for my, what bars? My 1 minute bars, right? And then I go in, I can add the others. Okay, so now I just change these over to my 2 minute, my 3 minute, my 4 minute. So all that to say is just, if you're trying to, most people aren't even going to notice, and it really doesn't matter that much. Okay, I mean it's 1 minute. The thing's going to flip back and forth so fast. Either way, um, I know some people who don't even look at the 1 minute. Like they literally just they look at the 2, 3, 4 because they're like 1 minute is just too fast. So, um, up to you, however you want to do it. But bottom line is that's what it's doing is it's showing you instead of you having to watch 4 of these, it's letting you focus on one of them. Okay. Right, exactly. Right now the setting is not the setting is defaulted into confluence. So we're having to work on the whole array formula issue. Instead because this is a drawing, it's a whole different animal. When it works, it's a lot more challenging. It's just this is the idea is what we're trying to do is make where you don't have to have all 4 of these charts open to see the information you want to see. Now the other thing about confluence is it's basically on instant signal. Okay, it's not on setup. So what it's letting you do is it's basically letting you know there's potential chop, potential coming. We are going to work on making like a pink and blue version of it, like where it shows, pink and then red, blue, then green. Right now, it's just basically assuming, like if I went over here to the indicators and I changed them up to from high low to instant, which I don't recommend you do. Okay. I'm sorry, from heads to breakout with instant to instant. And then let me check. Yeah. Okay. So see how like it has just like red and green? Okay, that's what this is doing down here. It's just showing the red and green. So it'll flip back if it flips back, but it's letting you know, hey, this thing is looking like it's in a downtrend. And that's really what you want. I mean, you don't want to be going in like, because we're working on putting the option for the pink and blue, but I personally probably won't even turn it on. Okay. Because I don't want to be going, well, that one's only blue. It's not green yet. I mean, it's adding like this whole additional layer of questions. Okay. And the 1 minute is really more to give you a heads up on 2 minute. Like a 1 minute wouldn't really keep me out of anything. It's just like, hey, 2 minute, 3 minute, because you'll see how it'll progress. 1, 2, 3, 4, that type thing. Okay. So it's just to allow you to be able to watch multiple charts at one time without having to watch multiple charts at one time. Now, what you can do as well, now, and you cannot put this on a chart with multiple data series. If you do, it's not going to work. So there's several ways you can do this, okay, as a solution. One of the things was I want to watch multiple instruments on the MVP. Maybe like you don't even care about looking at Dow or S&P or DAX. You're just a Russell trader, or whatever. What you could do, so we can go in, we can actually drop a few of these, okay? Then we're going to go in, we're going to get rid of some indicators, get rid of all these indicators off here. And then I'm going to go in, and it's sort of a, what are these little, like, just cool tricks as you learn how to do stuff that can be helpful. Before you do this, just add on something. I don't care what it is, like just really simple. Would be the best thing to do. Is that like literally want it to be really small. And a sub indicator. Okay, I'm gonna go over here and I'm just gonna add like this volume. Okay, there's a reason I'm doing it, and I'll show you why here in a second, because otherwise you won't be able to access the chart with what we're about to do. We're gonna go to indicators and we're gonna go to confluence. Okay, but we're gonna change it to panel. We're gonna change it to same as input series. All right. First, we're going to open our data series up over here. We're going to make these transparent. So first, let's make our bars transparent. Okay. Now let's add that indicator. The reason I say like to add something else is because it's really hard to click inside the screen. You'll see what I mean. And I'm gonna make it same as input series. It's like trying to click in here. I mean, it's a little more difficult. So you got, I mean, there's just one little section on the right side where you can get to it. So you could do that, I guess. You don't have to have the volume thing on there. Okay, so we'll get rid of volume. But you just, the only place you can click is gonna have to be that left little part, okay, of the screen. So it's like right over here. That's the only place you can click on the chart if you want to edit anything. So let's say you wanted to do this and you wanted to monitor, say, the S&P while you have the Russell up. And you could go over here. Oh, now it's actually, let's click on it. That's good. Okay, so we're going to call this, confluence only chart, like as a template. Okay? And so if I just wanted to have the other instruments up, go to File, New, I'm going to go to Chart. Now let's say I'm going to pull up, I want to watch the Dow. Because I'm not really going to trade them. I just want, the confirmation of everything going together. And so now I'm going to go down here and I'm going to have my confluence only chart. And set it at 1 minute because it'll give you the best granularity just by doing it. So if you just trust me on that one, okay? Set it at 1 minute. And then click, so we got confluence only chart. Click OK. There we go. See how easy that was now? Like after you get one done in this, once you get the templates done, things get a lot easier. And I can line them up over here just to have a, you can try to make sure everything's sort of lining up with your chart size. By doing that, that'll allow you to see it a little bit better. And let's see. Yeah, sort of has a little bigger margin there on the side, doesn't it? Well, the reason this one has a bigger margin, see, it goes up to 0.25. That's sort of odd. Now we go from 0 to 1. Anyway, so we'll do another one. Go to chart, and we'll add on. Let's say we want to add on the Dow, or no, we got the Dow. Let's say the Nasdaq. Okay. And if you trade any indice, I recommend that you have. Even if you trade the DAX, I recommend you have like you're looking at the other ones. But this is just a real simple way. Now you could also, I mean, there's a lot of cool applications of this, but you can just sort of see. I mean, this is a simple, easy way just to see what the trend is. And so we can go in here and let's add in, like I said, the Dow, Nasdaq. There we go. Once you start learning how to use like these little bitty simple tricks, you start coming up with all sorts of cool ideas on how to make things look and save yourself a lot of screen real estate. Okay. And so we'll go with that confluence only. Now we have the Nasdaq. Now let's say that we want to be able to monitor not just the 1, 2, 3, 4, but maybe I want to see longer term trends also. Okay, that's a pretty short term trend, right? Even 1, even 4. So what I could do is on the indicator, I can go in here and see where it has that array. I could add in like 30, 60, 90, 120, 240. Okay. Obviously, it's going to make it get a little bigger, but, or maybe I'll add in 10. We'll do 10, 30. Like when I'm trading 60 tick charts, I'll trade 60 tick diagnostic bars. And these are obviously for bigger trades for underlying markets. But I'll use 30, 60, 90, 120 when I do that. And but I'm going for like 300 pip moves and stuff. And if you wanted to, you could add in the real, like even a 4 hour trend right there. And I'm going to go a little ridiculous. I'm going to even add in a daily. Okay, so that'd be 1,440 minutes. All right, so that could let you see the overall daily trend. And now I'm going to click OK. Click OK over here. By the way, if you click apply and close, that's the same as clicking OK. So you don't want to click apply and OK, because otherwise you're reprocessing the same thing twice. So either do apply and close or OK. The reason to do apply is because maybe you want to check out how it looks. So I can go down here and I can click apply. I can look at it. And if I want to change something, I can change it. And then click apply again without having to reopen it. Okay. And then click close on there. Now, why do I get a blue bar down here? I don't have enough data loading for dailies or to even calculate anything. There's only 5 days. So let's go in here. Let's just make this, we'll just make it 125 days. We'll see what happens here. How long does that take to load? That's fast. Okay. So now we're going to go to our templates. We're going to save as Confluence only 1 minute to 1 day. Okay. Now, you may not want that much information. That may be a bit more than you need. I'm just trying to, so I hope you understand. I'm not telling you to put all those time frames on. If you're only trading 4-minute bars, you definitely don't need that. If you're trading 6-tick bars, you probably don't need that either. But this will just let you see more information. More information could be good unless it overloads you, and then it won't help you. Okay, it'll start giving you that whole analysis paralysis problem. So I'm trying to teach you how you can set it up to whatever your trading style is. Okay. So same thing here. I got to load more days. 125 is sort of the magic number on most things. And basically it ensures you have like at least 10 weeks of data to have 10 weeks of data. So that's why it's the magic number. It gives you enough information to process a lot of different things. So we'll go over there. Now, if I was doing that, I'd probably want to add also those additional time frames even to my current chart. Now, 4 minutes, I really don't care. I don't care what the whole daily overall MVP trend is, because obviously you're going to have a lot of up and downs in between the day. It doesn't matter. I mean, we could have a big daily uptrend, but I mean, you could have like 20 great shorts in between every daily up move. Okay. But this is a cool way for you to keep an eye on everything. And if you decide, oh, that's too much data, I don't need that. Remember, we saved the first one, right? So you can go back by saving the other one, by having 2 different ones. Then I can just flip right back over. So I'm like, yeah, that's too much. But if I do want that, now I have it set up. It'll be easy for me to pull. Yeah, I figured out you can't actually right click on it. I think I was trying to drag it the other day, and that was my problem. But where'd that go? Confluence, only chart. There we go. So now I see, hey, all 4 of them, are potentially turning down. Now remember, Confluence shows you setup. I see, like right now, we're even getting a short setup on the 4 minute. Okay, so not necessarily a sell, but that will give you a lot more confidence in your trades by having all those pieces come together. So, are there any questions on Confluence? I can load up a. Let me do that just to have the whole comparison model over here. Oops. So yeah, so like right here, you can see on my Confluence. So I can have bigger ones, I can have smaller ones, whatever. So I had this on a 60-tick chart earlier. We'll change that to 1, 2, 3, 4. Okay. Disappeared. Come back. I'm going to have this set to 125 days because the indicators I have in there. Do you have any intel from Ninja about Ninja Trader 8? I know they're working on it. Sort of like us in 3.0. But it's not out yet. So that's pretty much all I have for you. As far as our architecture integration, it won't be an issue. We'll have access to it before it's public. And if it should be backwards compatible with NT7 indicators without a problem, it'll just be faster multiprocessor. But we'll have time if any changes need to be made to make it before it gets released. So I'm actually going to go out to Ninja's office here in a couple months in April. I'll be out there. Anyway, so yeah, so I'll add that on here for the 1, 2, 3, 4. This is for the MVP reversals, but I definitely have it on that. Okay. Okay, so I think I got. Do I have everybody's questions so far answered about Confluence? Because then I want to move on to some of the other new stuff. And again, everybody understands if you add Confluence to multiple data series charts, no bueno. Okay, won't work. To give you an example, the DAX chart right here. We'll flip that over to Russell as well. And oh, okay, I have yeah, the indicator I have, the expected range. Makes it look as if. Yeah, so we're just gonna load up a new one. 1.5 and 5. No, the default setting goes on everything. It's 3 and 10 on 1 minute. But don't like. I mean, honestly, Steve, I would tell you don't even have a 1 minute chart open. So, I mean, unless you're trying to do, EPC like expiration premium collection, which I'd say most of my trades are more TTPC than EPC. So it's just I don't even like having the 1 minute up now with the Confluence. To me, it seems it's a waste of space. Okay, so yeah, we'll add 2 of these. We'll make one of them 10. All right, and then we're gonna go over here, and now we're gonna add Confluence. Look at that. Okay. So it may draw, it may partially draw, it won't update live no matter what you pull off. And we've tried every combination under the sun, okay, of trying to figure out how to rig Ninja to do it, but it still has an issue. So we're working with one of the NT engineers to see if there's any way to pull that off. We still have a way to make the indicator, which I know Ben's gonna make if we can't get this to do what we want. So if I put one data series on there, no problem. I put another data series on there, and it will appear to work, but then at the end, it won't update. So it'll end up either it'll go away or it'll just be like white lines going forward. So you cannot have it on multiple data series. Okay, and that's just how NT7 draws. Let's see here. Okay. The next thing we're gonna go into is drop that off. Now, one thing I do have people doing, because the reason that often the number one reason people are wanting to put multiple data series on a chart is because they want to have the expected range indicator. Okay. So what I taught some people to do the other day over in the NetX trading pit, that were trading a bunch of different instruments, and they were trying to figure out the best way to do it because it's sort of a pain to set up like a bunch of these little like a confluence chart for every one of your instruments, and it's because it's one chart per. So what I taught them to do was we're gonna go in and we'll add our MVP on here. We're gonna add our confluence on here, and then I'll talk about the range here in a second. We're gonna add our expected range channels on here. We'll throw in our deviation levels, and we're gonna throw in our deviation, and we're gonna throw on our toolbar shortcut. Okay, and then it says, hey, you need more days, so we're gonna go to data series, change this to 125 days. Okay. I think I've seen like a couple instances where I've actually needed more data for it to load correctly. Yeah, so we pissed it off with all that. Let me see here. New chart. We're updating live data still, so I know we're good. And we're going to go to our data series. We're going to make this 125 from the beginning. Okay. Yeah, that's okay. Let me see here. Let me update this. Okay, so what is your question? It's regarding, okay, the expected range. Here, let me update this, and then we'll move onto that. I'm gonna restart, putting one more thing in there because I have two of them running at once. I only have one ninja running. Stop. Okay, yeah. So we're gonna go. Yeah, we're gonna go into the range indicator. We're gonna go into how to add confluence on there, without having to do the multi data series and have a bunch of data series for the range indicator in one data group. So just how I taught you how how to do multiple data series like 1, 2, 3, 4. Well, you could also do multiple data series. Say like you're using the 60 minutes. Okay. You could also do multiple data series for going in and putting range indicators. So meaning you could put a bunch of range indicators all at one time on one chart for multiple instruments. Because confluence, you can't have multiple charts on one instrument, but the range indicator, you can have multiple charts or multiple data series on one chart. There we go. So confluence, you can have multiple data series on one chart, but range you can. Does everybody understand that? Like on the confluence piece? Let me show it to you. Okay, cool. Yeah, we'll open it up and I will show you what I mean. Of exactly how to build it. Okay. And wait a second while I open this up. So now we're going to go in and we're going to add on the, say we want to monitor the 4 indices or the 5 or 6 indices or whatever. Okay, major indices. So I'm going to throw on ES. I'm going to throw on NQ, TF, YM, FDAX here, and FTSE. Okay? I'm going to change all these to 60-minute. Like this. And if you don't have them all set, so I'm just going to walk through just making sure you do, because you're probably going to follow along with this here. And then I'm going to change these. And what I will tell you is when you do rollovers, you basically need to rebuild the chart. Trying to use the template, it's just going to be a headache. Okay? So I'm just going to tell you right now, just rebuild the thing. You'll spend a longer time trying to fix your template when rollover happens than you will just rebuilding the entire thing. It seems like it takes a while, but I guarantee you'll spend 30 minutes to an hour. And I know we've all been guilty of doing it. We're so busy trying to make our template work again. We spend 30 minutes to an hour trying to get the template to work right. And we could have made the entire thing in like less than 5 minutes. Okay. So again, you could add in, 6 data series, make all of them transparent, make all of them 60 minutes, all with default 24/7. And then you could add on the indicator, the expected range, and you could then assign it to each instrument and make sure you assign it to the same, same as input series. Right there, same as input series, 60-minute, and then choose the correct instrument. You can have all your expected ranges together. It could also let you see volatility. That's a good way to look at volatility. And you can see they're pretty amazingly spot on. Or you could assign it to the same chart and then put it over here. Okay? Yeah, we'll get into volume spikes. Yeah, Steve, definitely. I'll answer that for you here in a second. Okay? So right now I want to get the expected ranges knocked out. So the expected range, just to make sure you understand what it is, over here, the expected range is how many ticks are expected for the market to move in that hour. Okay? Or points or whatever. So this was saying at 10 a.m. on Thursday. So now the expected range actually drills down to the hour of the day of the week. Okay? So the 10 o'clock closing hour, okay, so 9 to 10, it was expected that the Russell would move 7.2. Okay? And it actually moved, basically it moved about 7, so like 6.8. And then over here, it's expected, we're about to come up with the close of the 11 o'clock hour. Okay, and the expected range for this hour for the Russell's movement. Now, this is expected range high to low. Okay? is again 7.2. So we have basically the same expected range, and it does change. I promise you. So we got 6.25 or oh, okay, that makes more sense. I'm like that is not. I haven't seen too many hours be exactly identical. If I'm clicking over here, I'm going to see this hour. So click like in front of the hour to see the right information. I'm like, why is the actual higher than the expected not showing? Okay, so the expected range, the orange bar, 6.25 points last hour. My mistake. The actual range, 6.8. So what that's saying is the high to the low measurement in the hour of 9 to 10 o'clock, the high to low we expect to be a 6.25 move. The actual move we got high to low was 6.6. So, I mean, you're talking 3.5 ticks off. This hour, which is about to come to a close here in 5 minutes, the high to the low expectation was 7.2 ticks. Right now we're at 6.8. So we're just 4 ticks away from the maximum move really expected during this hour. And you can see just by looking back, I mean, there'll be some lower volatility times and higher volatility times. You know, like there was just a massive move. This is at night. See how it's just crashing down right there? So it's a bigger than expected move. But on the average, I mean, they're pretty spot on. And so it gives you a very proper expectation of movement. If you start thinking about that, that can help you a lot on just having realistic expectations, choosing strikes, knowing to look for a reversal, possibly doing a premium collection, doing butterflies. There's a lot of applications when doing this. So we can go into expected range channels. I don't know if you've played with this yet. I would suggest changing this to green. Okay. And click OK there. What this is going to do is it's actually going to put the expected range right on the chart for you. And just be patient and let it load. It's pulling a lot of data up. It's calculating all this information. It's drawing all these different bars. Okay. And so what it's actually going to do for you on here is visually show you from the open to the high. It's going to plot those 6.25 points. Okay. So theoretically, if I measure, yeah, so 6.3, you know, sure if I got right down to it, we could do 6.25. So that's the open to the high. It's also going to plot, you know, the open to the low, 6.25, you know, 6.3 right there. I mean, it's just, you can't really do 0.25s in drawings here. So right there. So it's plotting that directly on the chart for you. So you can actually visually see, you know, if the market trends up, pretty much what's the high I should expect? And look, bam, right there. The market trends down. What's the low I should expect? You know, okay. This would be a point where, now, this is giving you just some ideas. Okay, one, it could be a tighten your profit level. You know, take profit, whatever, for that hour. That might be a little, you know, depending on what you're trading. If you're trading underlying, that might be a little aggressive, but I would definitely just tighten it up quite a bit. The other thing you could do is maybe not take an entry that's right at the high because you're not surprised that it's pulling back. Okay, sort of like you're getting at the top and then you're getting the pullback before the bounce, and you don't really get any benefit out of that. The other thing you could do is you could actually look to sell premium right there immediately. You could sell a strike just like right above the high, 1182. I mean, you're talking only like a point away. You're gonna get like $40 for the thing. Goes right back down, and you get out if it hits like 50. I mean, you're talking like a $10, $15 stop loss and a $40 profit premium collection trade. So some really, really sweet ways that you can apply this. Okay. Now, one of the things when you see this is you sort of go, well, why do I even need the expected range indicator at the bottom? So pop quiz. Why would you need the expected range indicator at the bottom? How does that still help you? Yeah, the actual movement is still shown. So, and what do I mean by actual? Remember, it's high to low. All right. So see how like right here. Yeah, I mean this is basically our high to our low, right? I mean we're just now starting to exceed it a little bit. Actually, we're into a new hour. There's our high for the hour. I'm talking about this box right here. Here's our low for the hour. Okay, so this little blue line, when it capped out right there, that was actually this move right there. We're 7 points in, about. I mean, I have to. You'd have to fine tune the exact price. Like you can click on here and go in and get all the prices perfect. But basically, 7 points in on a 7.2 expected move from high to low. So this would basically be the exact same thing as if the bar started here and went down to here. 7 points lower. Okay? So if we started here and went down here, we're basically right there at, right there, like at 7 points. We're right at the low. So are we surprised there's a pullback? No. Okay? I mean, you want to talk about accurate channels? We've all had our experience with Keltner channels and Bollinger Bands, and I mean, name your velocity channels, and I can't even. There's so many of these things out there, but these things are insanely spot on, and they're by hour, so they're using the true footprint of the market. It's sort of think of this as almost like hourly deviation levels. Okay. Um, and so right here, I mean, would be, you know, I might want to look at buying some premium right on this. I mean, we've been playing with this and having some pretty good success. A few of us have already started playing with it. And that was the first thing I saw, was looking right at that. Um, do we have any questions on that? You'll see some potential, how that could help. So, yeah, I mean, you're trading Apex, okay? So right here, and let's take it back to where we were at, like the top of one, like yesterday. And we got a nice little, run over on the Russell. Most of the indices were pretty flat, but yesterday we had a nice run on the Russell. It's running up, and look right here. Then all of a sudden, boom, we're at the top of our expected movement for the hour. And I mean, this was plotted at the beginning of the hour. Okay, just like right now, like it's plotted the hour. The size does not change. There's no back painting. Okay, so it was plotted right at the beginning of the hour. I don't know about you, but do I want to take this Apex trade? Or if I do I want to immediately probably trail my stop on every single bar? And when I see it pull back, maybe I should be cautious on taking this Apex trade. Now, the MVP filtered it out for me, technically, but if I go look at the, MVP filters, okay, what are the rules on elite MVP filters? Is either the MVP has to be lined up with Apex for you to take the trade, like already, like right here, we already had the MVP lined up, so you can take that trade. Right here, it's lined up, okay? But right here, not lined up, but if it's within 2 bars, it does line up, then I can take the trade. Once it breaks out of that bar, now it did fortunately break out of that bar, um, by 2 ticks right there. We got, or maybe it did. Let's see here. What do we get? A high. We need to change this. This chart's interfering in the background. There we go. Let me send that over to Ben. All right, so right over here we got, what's our high? High is 179.9. High is 180.2. Yeah, so it's like 3 ticks above. Okay, so uh, so right there, I mean, like let's say you took that trade, you got in on that, you're getting a trade, one that just bounced right off the expected range perfectly. I mean, do you really want to buy with that much expected movement possibility left in the hour? Or do you think it might be a good idea to back off? Do you think we may have exhausted our move for the hour and that we might want to expect chop, at least for the next like 18 minutes? And if you go back and you'll look at this, you'll see how like confident you could easily become. Now, what could you do if you expect a chop for the next 18 minutes? What could you do to take advantage of that chop? Yeah, the expected range is using the actual movement that has happened previously by that hour of the day, by that day of the week, for the last 10 weeks. So what's really cool about that is because different traders come on at different times consistently. Okay, you got European traders, Asian traders, U.S. trader, or U.S. not necessarily U.S. but America's traders, in Mexico, South America, North America, Canada, all that same time. And then certain ones have certain hours, like you got the pit traders and floor traders, they'll be in there real heavy in the mornings. They'll, about half of them are gone by the afternoon. So like there's all these patterns that constantly happen in trading, the seasonality. And so this captures the expected range of the seasonality of every whatever time frame you want. It could be hour, could be 2 hour, could be 3 hour, whatever you want. So Brian, but you're exactly right. You could butterfly. So if you want to, you're like, you know what? So you could go in because I mean, a move if you're all the way at the top of the range, the expectation is that it's not going to go back down below that low. Okay, because that would be a high to low already happened, right? So you already got a high to or right there, or sorry, open to high. So even if it was going to move back down, the expectation is it really wouldn't move back down further than that, at least in the next 18 minutes. One of those may be, pretty cheap or worthless, so you may not get into it. The other one you could definitely sell right here, some premium, and maybe when it does come down, maybe you can get this one for about $20, even though there's only like 6 minutes left because it's only like a point away. So, that could be a possibility right there. So maybe you end up pulling in, $60 on a butterfly. Okay? Right there in the range. But even if you're not doing butterflies, even if you're not going that advanced, I want you to be able to, like, my goal has always been, the goal we've always been striving towards is how do I get rid of as much of the style in trading as possible. Okay? So as much of the style in trading as possible. But how do I, meaning like the personal interpretation versus it being directly on the chart. So now, as far as yesterday, Steve mentions you were trying to use, when you say use this, I'm guessing you mean the range indicator. Okay. So yeah, so if we look at it, now I don't know what instrument you were looking at yesterday, but I mean, it'd need to be near it. But I mean, even look at this, like this 1 hour we broke out, we still came right back down. Now, if you don't get up to the high, there won't be any premium there. Like if you're like this far away, you probably aren't going to pull this thing off. Okay. So, if you're not getting an actual, if you're just like moving only up to there. So, I mean, even over here, look at this. We go down. End of the day, we do this big sell off. look what happens. So if you go, this is like where you would be buying, Steve. Like right here, right when you're hitting this low, you're buying just like maybe, as close as you can get for about 40 bucks, and then it goes down and then boom, pops back up and it closes right back inside the range. So if you're trying to do it like right at the beginning of the hour, like right here, I mean, that pricing's built in, okay? So it doesn't matter if it's a flat day or a volatile day, that pricing is built in. So it's more of doing it on the edge of those ranges. You got that one yesterday. Sweet. Good. For you, man. Okay. But this will definitely help you with your Apex trading. Again, going short on Apex. You're short. You're enjoying this, whatever. It's moving down. Boom, boom, boom. You caught the Apex reversal. Anyways, it's moving down for you. And because right there we had a Apex reversal entry. We didn't get it here yet, but we got it here. It's over here. So you can go in with this on the, two higher Apexes with higher Ps, and then you get a short Apex, and you're waiting on confluence. Confluence lines up. Got a little late on the confluence, but by the time the confluence lined up, you're good. You're still at the high of the expected range. You have plenty of expected movement. You ride the thing all the way back down. You get a PE pretty close to the edge. Playing a little fire there. But, I mean, anything else, you just, at this point, you're sort of wasting your time for the rest of the hour. Okay? Does that make sense to everybody? Are there any questions on that? I hope that's just like wow to you, because it's wow to me. It has nothing to do with it. It's mine. I made it. Whatever. It's just like I love having as much expectation as I can built into my charts. And I'm not telling you should always premium collect. You should always reverse. I would look at it. I would look at it by hours. I'd go back and look at that same hour over the last, like 10 weeks. Okay. I mean, it's not that hard. You just go back and look at every Monday. All right. And what I do is I open up the data box, and which is probably behind the screen. Yep. And then I scroll right down here. You can scroll it however you want to. And notice it'll give me the dates up here. Okay, or you can take this. If you want to scroll really fast, it's like that. So your dates right up there. So you can line up your dates. And I'm sure there's, certain hours you're probably going to be a little more nervous about doing it on, like doing a reversal on. I mean, I'd be a little more cautious, honestly, about the morning hours. But, there's also the hours you're going to hit it. One of the things I love about this on Apex is on Apex, diagnostic bars, okay? On Apex diagnostic bars, you sort of lose that sense of time, right? Because they're not time-based. They're only price-based, which is good, okay? Because you don't get a lot of this crappy, stuff on the chart. But you do lose a sense of time, and it sort of feels like every bar is the same, like every bar is 5 minutes or 1 minute or 1 hour or whatever. What this does for you, another advantage for an Apex trader, what this does for you with these diagnostic bars is it actually puts time in perspective, okay? A really slow moving hour that had very little volatility, like this bar took forever to form, okay, is going to be narrower from left to right. It's like right here, see how this is narrower? And look, we got these bars in here that are taking like, 18 minutes, 20 minutes. And then over here, look, this is a really wide one, right? And down here, like 8 minutes, I think, is like our biggest bar. And then most of them are, seconds or minutes. Okay, like 2 minutes, 2 minutes, 2 minutes, 1 minute, 2 minutes, 2 minutes, 1 minute. So we had a lot of activity during this hour. We didn't have much activity at all during this hour. Now, it may have trended, it may have chopped, whatever. Not so much saying that, it's just, it lets you, like, that was an hour of movement. That right there was an hour of movement. A lot more movement happening every minute. A lot less movement happening every minute. Okay? So it really helps put that time back into perspective for you. Something else I've noticed is when you see the expected ranges get smaller. Okay? So see how this box right here, it's bigger than this one if we measured it. Go on here, and that one's like about 7 points in expected movement. And all of a sudden we go down here, I get 5 points. I mean, more than a 25% drop, okay, in expected movement size. What I've noticed, what I'm looking at is that actually tells me that's a slower hour. That's probably going to come up. Like I bet whenever it goes from 7 to 5, that my width, like right here, I got this long width. I bet I'll have a less wide box at the end of the hour. I bet there won't be as much movement. This one gets even smaller. Okay, look how it is not as wide as the previous box. This one gets a little bigger. Okay, it's a little wider. This one gets even bigger than all the others. And look what happens. It gets even wider. Okay. And I'm not saying that's going to be perfect every hour, but I mean, look at how this one gets really small. And look, this one gets really tiny. I mean, look how small that hour is. Okay. And also, it gets bigger, gets a little wider, gets a little bigger, gets a little wider. So it gets smaller. All of a sudden, it's narrower, meaning less activity. So got real big. Guess what? That's the hour that took a while, and we filled out the entire range. Now, we even filled out the ranges in these small ones. Okay, so don't think you're not going to hit the range even in a small one. It's a smaller range. Okay, but that hour took forever. Okay, like I mean, like as you're watching tick by tick by tick, this is like boom, boom. Okay, decision, decision, decision. You know, some of these are like maybe a decision, if any. Okay, so sort of it's pretty cool. It gives you like I said, a perspective in time. It gives you a perspective in how busy to expect that hour to be. And if it's getting wider, I expect there to be more activity in the hour. And again, that doesn't necessarily mean that it won't hit the range in that hour. It just means that I expect there to be, more ticks happening. Okay. And we got narrower. Check this out. See how like we went large, large, boom, we had a lot of activity. Then we got narrower right here, right? By the way, you can't put the expected range actual down here. This is an example. Let's say you're an Apex trader. That's an example where you'd want that chart like this. You have very good reason to have this chart because you can't put hourly charts on like hourly bar plots like this on a diagnostic chart. You can try it. You'll see what happens. Um, but this is where you'd want like this setup. So you could look at what's going on for your high to low movement. Like we're already pretty much right at the actual. Got a little bit more movement left potentially. But what I want you to notice again over here, look at this. When it got narrower, this is, I mean, and we're, this may go. Well, we have 42 minutes left in the hour. It'll be very interesting to see how narrow this box is compared to the one before it, like width, left to right. I bet we have some very slow bars in the next 40 minutes. Okay, just because it's getting narrower, and by narrower again I mean the height. The expected range has dropped right there, and we can see that difference very visually right here as well. So we went from expected of 7 to 5, 4.5 in this hour. And we're pretty much at the expected movement, high to low right now. We're within a tick of it. And look how there's a pullback happening. Right? We were one tick away from the expected high, got a little bit of pullback. I'm not saying, hey, immediately it's going to just go up. I'm just, it's so funny as I want to know an expectation of movement. And it's sort of inverse of what you would naturally think, but it's sort of, I want to know what not to expect. Not just simply what to expect. I want to know not to expect the market to keep going after this price level. Or at this point, we're about at the top. I don't expect the market to keep going. By not knowing, by knowing what not to expect, I can make a lot better decisions. We're about to get another apex long right now. Okay? Right? We could, if this P closes out here, we could get an E. I'm already in a couple of these on the way up. Okay? If I'm following the apex rules. We got a buy right here. About to start a new hour. That's a little bit different. We're about to start a new hour. We got a buy right here. Yeah, definitely. We got some movement possibility. We got another buy right here. Do I really expect to make a whole lot of money in the next 40 minutes if I get another E entry? Personally, no. Could it keep taking off? Yeah, it could. But I'm already in a couple trades. Do I need to keep adding on to my position? Okay. So I wouldn't. I'd add on here. Yeah, I'd add on here. I'd add on here. I'm not adding on here. Yeah, exactly. I'm just going to trail my existing trades. And I'm probably going to trail with the tighter trail too. So I'm going to get right in there, I may even have taken off maybe, let's say if I had in 3 layers, we're up here, we're within 1 tick of the expected high. I mean, within it, at that point, it's probably time to take off some of your trades. Maybe 1 or 2 of them, because you're going to give some of it back. So over and over again, you're going to give. I mean, how much do you want to give back? And this gives you not a money reason to take off your trade. Not I don't want to give back all my profits, but I mean, there's no reason for me to expect the market to keep going. So why would I allow all that money to drift away, which is what's happening right now? You've now given up on one contract. You've given up $200 on a future. Okay? I mean, it's not 200. It's about 140 right now of profit that you had. So I mean, you still have plenty of profit if you got in. Back here, you're up, $350, but now you've given up 150 of that, and you're at the expectation of movement. So Stephen adds in a really good point, and he says the 1184, by the way, was the all-time high set yesterday, which also is 1 tick away from the expected movement in the hour. I mean, that's pretty nuts. So, and it's and then we go and we throw this on. We don't even have it on here right now because we're going through so many things. But this ought to remove more and more of your subjectivity and allow you to really trade objectively with realistic expectations. And that's the more you can pull that subjectivity out and use that objectivity, like the sound method. Michael's saying, hey, this is really cool. This is very sound. The better off you're definitely going to be in your trading. So we can also look over here. We can see that we're only a few ticks away. The high of this range is also a half deviation level. Okay, 1185.1. So we got some confluence and resistance there for this hour. Okay. We're at the high of all time. We're at the high of yesterday. We're almost at the high of the range, but we actually are at the high of the range from low to high. And we're about at a half deviation high. And then now if we go in and we add in deviation levels, this is all about putting together the expectations. Basically, the reason to put in 125 days to show the last 10 weeks is so you don't just show like this week's. It'll basically, I can see about the last 10 weeks of data with the last 10 weeks of data before it. So, not quite the last 10 weeks, but so you can see multiple weeks back, and you can have so you can scroll backwards. Otherwise, you're only going to see like maybe a few days, but just enough in. Then also to factor in holidays and to factor in weekends and everything else. So, oh, even lying. That's all right. But so yeah, we gotta move our line up here to the high of this range. So let's see here. Actual high of yesterday. Yeah. All right. So all right. So 1187.5. Oh, which is a 0.7 deviation level today, by the way. 1187.5. And thought I added on. Did not add on. Oh, I added on that same thing twice. Okay, so now add on the deviation indicator. But yeah, 1187.5 is the 0.7 deviation level. It is actually the high of yesterday. So, um, yeah, basically, if you do too short of a time frame, like 1 week or 2 weeks or 3 weeks of data, then you're not really going to account for news reports that are going to come and go. You're not really accounting for holidays that happen. If you go too big, then you're smoothing everything out. You're not really taking into account current volatility. Okay, so just because it happened a year ago doesn't mean crap today. I mean, there is an advantage in that idea, but in the reality, when you're intraday trading, when you're day trading, I'm all about a year ago. Okay, when you're trading daily bars. Okay, but when I'm intraday trading, I mean, I got a year of data. I mean, if we go in here and we look at it and you start doing some math, I mean, you actually have a lot of additional historical data. How do I put this? 10 weeks. Let's say on average 5.5 days because the holidays in there. Okay, so 55 days. And you got, um, I'll say 24 hours if that's too much. Because obviously you got Sunday that's not full and Friday that's not full. We're just going to say, yeah, whatever. I mean, that's 1,320 hours. Okay, or bars or whatever. So that's like looking at 3.5 years of data. Okay, on daily bars. If you were looking at a day bar trader, so you got plenty of seasonality intraday by looking at just 10 weeks, and it shows you current volatility. It shows you seasonality of time of day of those traders. Their habitual trades. I mean, there's algos that are buying or selling. At certain times of day that run on clocks. Okay. Um, so I mean, there's a lot of those pieces, and the news consistently happens at the same time over certain days. So it's factoring in some of those news announcements, also factoring in not being in there, so it's giving you a better average. News obviously is gonna be more of a time when you may see it break out when it's a high impact report. You'll be surprised how many times it will actually be right spot on still. But yes, I mean now we're moving back up. And again, I'm not saying this won't be a good trade. I'm just saying I could also see us getting in on this right here and watching us get stopped out. Like it goes up and we're like, sweet, and then getting stopped out like right here. You know, I mean, maybe the best trade ever. I mean, the Apex just completed. That's awesome. The trade worked. I trust Apex. I love Apex, obviously. You know, it's how I like prefer to trade and look at the markets. But I don't have a big expectation that this thing's gonna continue. And by the way, now we've actually hit our expected range on the hour, like to the tick. So 4.5 actual, 4.5 expected. Look at that. We went around the expected. Look what happened. Right at the exact expected move. And you bought, if you follow the Apex, okay, which again, I like Apex. I'm not trying to bash it. I'm just trying to give you a little bit of, you bought right there. Your MVP lined up. Good trade. Everything lines up. But how much do you expect to make? Okay. And then if we go down here, there's one thing I know a lot of people have not really embraced or paid much attention to at the moment. But what this indicator does, okay, is you got a zero line, okay? That's zero deviation. Okay, positive, it's an absolute number, so it's always a positive number. The blue line shows the high to the low of the day. Okay? And how far we have deviated from low to high on a one deviation move. So like settlement to one. Okay, whatever that one deviation number is. The red shows how far we move from the low. Okay? So right now we are at a one deviation from the low move, meaning the market has moved. What we expect is a one deviation move in a day. So if we back this thing out from the low of the day right over here, right down here, okay? So right up here, you could measure it with a ruler or whatever. About 13 points, okay? If I go over here and I look at what is a one deviation move, right here, to settlement, about, so about 12, 13 points right there. I mean, I'm not being exact, but yeah, we're about, right on 12 or 13. We are at a one deviation move on the day. Again, that's as much as we normally expect. Go back and just look at the charts and see how many times, okay? And again, it's not at a one deviation level, but it's at a one deviation from low to high. That's the big value in the deviation indicator, is it shows you how far is it pulled back from the low, or the green would be how far is it pulled back from the high. Okay, see how it's starting to 0.164 now? Is it starting to pull off of that high? So that's why the green line's rising. Is it starting to pull back closer to the low? That's why the red line's going down. So I'm at the high of the expected range. Okay, I literally hit it to the tick. I'm refocus this to make it easier. I've hit a one deviation high to low, close to a half deviation level, a couple points, of course, away from the high of the day, high of the ever, whatever. But I mean, just looking at, I'm at one deviation high to low, and I'm at the expected range of the hour. That's a good sign of exhaustion. Okay, so again, it made its trend higher. Who knows? But this is gonna. I remember I said like this is probably gonna be just a really slow hour. And is it? Well, we can put it into perspective by going over here. Right now, it's pretty slow in comparison. So, you get a little movement, but it's up, down, up, down. But and there's a lot of things out there about seasonality. Um, and this isn't so much about direction, which is, I think, one thing that's really important. I haven't seen the consistency in any of the tools I've looked at where people made out as far as just complete directional seasonality, like for like intra hour. Okay, now I mean daily or longer term, multiple hours. You can add more reality to that. But the biggest thing um, is looking at it and just going, what are my proper expectations? That's what I'm trying to help you out with, because that's a lot of the style of trading is having proper expectations that are not based on your wishes and desires to make a lot of money. So, um, now in the deviation level indicator, I know I got this question a long time ago here in the during this webinar. Um, this is where you can enable alerts for deviation levels. So you can enable alerts, you can enable voice alerts. If you have this deviation indicator on multiple charts, you better turn them off except for on one of them. Like, don't have it on Russell 4 minutes and Russell diagnostic bars and stuff, or you'll get like blown away with way too many alerts. Same thing with like Spike Striker and MVP alerts. You only want the alerts on the charts you just want to hear it on. Meaning, if you have multiple charts with the same instrument with the indicator, only have one of those indicators with the alerts on. You have the alert turned on multiple indicators when your alerts window shows the same alert like 4 times in a row on the same instrument. Okay. So right here, you can turn on or off any alert for any level you want, or visibility of that level. Actually, this is visibility of the levels. You can enable the alerts. Um, you can change the colors of the lines. So like all those different pieces can be in there. Basically, it'll enable an alert when it gets within a deviation level. It'll also enable the alert when it gets into a 1 deviation high or 1 deviation low level. So like that red alert, like when a red line got up to the 1 deviation from low to high, it'll also fire off an alert. So 1 deviation low to high. Okay. Um, so it's very, like I said, it's very easy to ignore it, but if you'll have the indicator up and have the alerts on, that'll help you keep track of when it's at a deviation level, when it hits a deviation level, when it hits a deviation low to high, stuff like that. Um, okay, so now you know how to do deviation alerts. This is where the deviation alerts are. And again, the reason we put it in the deviation indicator, because you don't just want when it hits 0.5, when it hits 0.7 or 1. You want it when it also hits a low to high of 1. So that low to high of 1 with that, max amount of expected range, that's massive. And now you can, see it. Okay. All right. So I'm going to bring in Spike Striker in a second and go into that. Before I do that, let me pull up Let's see here. I want to finish up expected range. A couple things on expected range for you. Gonna open up I have so many different Russell interpretation charts open right now. Anytime I update anything on a Russell chart, it updates all of them. Okay, so over here, I'm gonna go ahead. I'm gonna add my expected range. And by the way, you can use this on anything: stocks, forex, futures, whatever. Okay. Um, and it's probably gonna make me add more data. Um, Go ahead in the channels. The one other thing I want to show you on the channels, I want to show you two things with it. One of them is, again, you can apply it to any time frame, okay, and you can apply it to any bar size, any bar type. But also, let's say you want to look at, and this is something I'm literally just playing with, okay. Not a new idea. It's just we haven't had time to. We just released these yesterday, right? Yeah, I think yesterday. Um, you could go over here and change this. I know we'll try like get as off of a color as we can. What can we go for here? Go for a. I don't know. We'll do that. Then we're gonna go over here and we're gonna go for an aqua. Okay. We'll do cyan because that's really not cyan, but magneta. Where is magneta? That'll work. Okay. You can also change the period. I can see the expectation for 120 minutes. Okay. So I could look at 120 minutes. I could look at a 1 day expectation. I could look at a 4 hour expectation. I could put in a 180-minute expectation, and it'll look at all those at once that I want to put on there. And then I could have them on top of each other like that. So notice how I have like the big bars. Okay. Like this is 2 hours right here. 2 hours. And then I have the 1 hours inside of it. That might be helpful if you're over and trading MVP and you're choosing the next hour out versus the current hour. Okay. Um, so if I was over here and I had, say, 4-minute bars up, and let that load up. And then we'll go in and we'll add on, say, MVP. Okay. Magenta, not Magneta. Still wasn't on the list. Um, I'm thinking X-Men. Magneto. Exactly. Somebody else has said that too. All right, come on, open up. All right, so yeah, you come in here, you get a short, you're trying to find a strike. I mean, you could look at maybe what's the expectation over the next 2 hours. is that even realistic? You could have up your expected range. Now I'd have it up on one of the things you could do. We talked about this when we were looking at the this big setup over here. But one of the things you could end up actually doing, we didn't look at. But let's say you were trading. Let's just remove a couple of these. And remove all of them for a second. Add one more on. Change this to pound dollar. Okay, so I'm going to show you some ways to do this. Then we're going to add in one more data series with pound dollar. There we go, 120 minute. Then we're going to add in our expected range. We're going to make this same as input, same as input. We're going to change this one to 120. Let's see, okay. So now I could actually monitor 1 hour and 2 hour expected ranges at the same time. Okay? So pretty cool way to put two of them on at once, and then of course we can get rid of the one over here. We don't need the one. We don't need, yeah, that right there. So this will allow me to monitor the ranges on the chart being plotted, but also allow me to monitor the actual movement on the 60 and 120. So that way I can monitor both at the same time. So yeah, Craig, that's actually something it's on my list to do as well. That's funny you bring that up. Or Craig, I mean, sorry. Craig says, has anybody looked at expected range for like EPCs? So having like maybe a 5, 10, and 15, um, maybe expected range channel or something like that. So it's one of the things I've actually been meaning to look at. There's so many ways to apply this expected range. Obviously, I haven't even been able to uncover and spend time on looking at all of them and testing them all out. But it was obviously there's just a lot of different applications. But anyway, so yeah, this would be a way to monitor your actual, and it's looking a little bit too similar, isn't it? No, it's all right. Same as input, same as input. Okay. Yeah, it's 38 and 22. Okay. So, but yeah, this lets me see the sort of the current hour, next hour, expected actual. Now, there's a couple other things inside of expected range that are new that I want to show you. What we've added to expected range over here, it's right here in the range type. So what I'm going to do is I wanted to show you each one of these. I think it'll be better. And let me add on 3, 4, 5. I am not saying you need to watch all of these. Actually, no, I only need one. I don't know why I'm doing that. Okay, I only need one data series. Click OK. Now I'm going to go to indicators, and I'm going to add in expected range. 4 times, 5 times. So I'm going to show you each setting. And actually, I do want these on the new panel, so that's good. All right, so right here, there's a high to low distance. You got to have that down by now. Okay, high to low. Pretty easy. All right, the next one is close to close. What is the expected close to close? You'll see why that's important in a second. Volatility by max and by min gets a little more complex. We'll go into that. Okay. And then we have volume, which would have made it better to use a volume. Well, yeah. Okay, we'll come back. But I'm going to change to like 6B. For this example, just because we want actual volume. That's odd. The close to close doesn't seem to be plotting on there. I'll check with Ben on that. That was working. That's sort of annoying. Sorry. Anyways, and then I'll also what I'm going to do. I'm going to leave it on there, and then we'll figure it out. But I'm still going to go. I want to go over it with you. Is you can label these so you know which one you're looking at, because otherwise you're like, which one's which? And I'm just trying to show you some different ways to use the indicators here. Okay. And we're going to have volatility max. Label this one volatility min. And then we're going to label this one volume. And then we'll label this one close to close. It'd be nicer if it would actually plot it. If I change an instrument, if I'll get something, it's just something's missing. Yeah, something's missing. Okay. Anyway, so we'll go back over here. We'll stick with 6B for a second. I'm choosing 6B because I'm looking at the volume. You could add 2 different instruments, and you could make them both invisible, and you could, apply it. But basically, what I'm seeing is this is my high to low, and the reason I labeled it is because up here, then I can actually see what I'm looking at. And then right here, I got my volatility. What this is measuring, and we'll go over. Why don't we choose? Let's see here, because I want to be able to give you a real more detailed example. I guess I'll go over. I can explain this with pound dollar. Okay, so within an hour, and it'd be even better if I went on and just made this 60-minute bars for explaining it. So right now, Frank, it will move 2 hours, every hour starting at midnight. Okay? So like 8, 10, 12. So you may have want to have a 1 on there, a 2 on there, a 3 on there. Okay? What I am working on, and I actually have a whole list I'm going over with Ben tonight. Is the ability to delay the plot. So like it'll start at, you could say, how do I put this? Like over here on the setting for the channel, like you could say like setting start at odd hour, start at even hour. Okay. So like it start at 1, therefore a 2 hour plot would be 1 to 3. Okay, so we are working on making it do that, but right now you need like a 1, 2, and 3 to see if you want to see current hour, next hour on even hours, and next hour on odd hours. You need to have all three of them, which I know can get a little bit like So, but that's in the works. So you still have current hour, no problem. It's just when you get those odd hours, you want to look at a 2-hour movement. That's where it gets a little bit tricky. But you'd have to have like a 1, 2, and 3 to do that. And so, but the setting that we're going to add in is basically delay by an hour from starting the apply. Okay, so these are hourly bars. Um, and if we go over here, and this is measuring like high to low to close, whichever is greater, which is max, whichever is less, whichever is min. So this is like basically the volatility in the hour. So if I go down here, I got, and I mean, I'm sure going to be off by a few ticks because I'm not getting super specific, just sort of hand drawing. And I go from, so I went from open to low, and then when I went from low to high, and then I'm going to go from high to close. So that's 14. So basically like 19 plus 33 is 52 ticks. Okay. Um, and so, I mean, there's a lot of ways it could, I don't know if I'm right on all that, but 33, 43, 44. And then we got to make sure we're looking at the right current hour. So, now the other way I can measure it is it can actually go the opposite. Okay. So I said about 52, which means I'm probably off by a few ticks, and that's where we're getting 47 from right here. Okay. So, I mean, if I brought that up by a couple ticks, now we're at, you know, 33, 43, uh, 47, 51. Yeah. So basically, this right here, that's the minimum. Okay. That's that 48. Minimum is probably going to be your most accurate for volatility. The maximum would actually be, so we got that down. That's with that 48. That's going open to low to high to close. Use that number on the minimum if that's smaller, okay, than the inverse. Open to high to low to close, which is like, what's that? 30, 40, 50, 60, 70, about 80 ticks or so. We're going to get 77. Okay. So basically, it's taking those two measurements, the open to high to low to close, or the open to low to high to close, and it's looking at which one is greater, which one is less, and it's showing you both of those. And the idea behind this, and you may not even find it useful, it was a request by a trader. Basically, it's trying to look at the volatility in the hour to see how volatile is that hour, and the benefit also being how much, how choppy is that hour. Okay, like as far as wicks and everything. So if I have an hour that has a pretty equal distance, and I think min, like I said, in my opinion, is a little more accurate. But right here we have like 50 tick expected, open to high to low to close min. Okay, and up here we got 30. Sorry to find a smaller one. Okay, here we got expected of 35, and here we got expected of 22. So basically the closer this min is to the size, the more trending of an hour. So there's 27, and there's like 28 ticks. See, 27, 28, and that was at 6 a.m. close bar. So let's look at 6 a.m. So right there, and that's our expected range. Now we also need the close to close. That's our other missing piece. That's why I'm upset that's not on there. But it's basically, how volatile is that? Is it going to be like up down up down up down? Massive bar with big wicks on it or not? And that's sort of the idea going into it maybe to know when to do a reversal trade. to be blunt, I haven't fully worked out the complete application on it, but it's there if you want to look at it. But the idea is measuring the volatility compared to the expectation of high to low, and then compared to the close to close. So I just wish it was plotting right now. The reason I want close to close is for butterflies. Because let's say my high to low is this, but my close to close, like my high to low is 40 or 30, okay? But my average close to close is like 5 or 10. That lets me know that's a good butterfly hour. Okay, it lets me know how wide to potentially make my butterflies on average. So, like how high above and how high below do I want it from where the close of the last hour was, or the last 2 hours were. And so that's the idea where I'm going. Like what I'm most excited about is comparing the close to the high to the low, and using that for a butterfly or for a trending hour. If close to close is 20 and expected range is 20, I should definitely expect a trending hour, right? So, um, and then the one other thing that's been added in, which is pretty cool, is volume. Um, this is pound. We need to, like I said, we need to look at 6B for volume, or an instrument that actually has volume. Forex doesn't have actual volume; it has tick volume, which is how many times the price changed in that period of time. But this will let you see not only the, and I mean, look at just a good comparison for you. Okay, let's sort of shrink these down so you're looking at these two. Here's a trick for you that I've learned recently. If you click on an indicator and drag it, like right there, it'll move the panel without you having to manually move the panel. So let's say I want to get rid of the high-low max, get rid of that, get rid of the min, get rid of that. And then I'm like, okay, now I want my high to low, but I want it up here on the top. Okay. Then, I mean, I can literally move stuff to a whole new panel. I can move it down here to the bottom to where it's blue. That's how you can move stuff around really easy without having to go in and change the panels. Nice little trick. Saw Ben do that, and I was like, how did you do that? I knew I could move indicators, but I didn't know I could make a panel, and it's just clicking on it and dragging it until you see the blue line. Okay, complete sidebar note. But if we look over here, like maybe I don't, because like right now I have this on, yeah, price volume here. We can just get rid of this so it's not jacking up our chart. We'll put this one right there. Let's get these out of the way. And I want my volume on the bottom because that's just normally how I read charts. So one more time. There we go. All right, so now we got high to low on top. We got the volume below. Notice the range increase as the volume increases. So if you're wanting to know the best time to trade, you could combine, on any instrument. You want to analyze any instrument, period, that has volume. Then you can go in and you could look at high to low, and you could look at expected volume to notice when is their actual movement, okay? And look at the two, and you ought to see a consistency of high to low and volume coinciding with each other. So the hours to not expect as big of movements, obviously lower volume. Okay, now there's still some decent movement. You're still getting, but you're getting like 14 ticks. Okay, versus getting 30 or 48 ticks. Low volume, low range. And so this lets you know, when is the best trend to trading time. It also lets you know when is maybe a easier, potentially butterfly collection time, but there's a reality to balance with that of if the range is lower. Okay, so this is what I want to caution you on. If the expected range is lower, that will be priced into the options. So the binaries will have more premium further out during this hour. So maybe they'll be 40 ticks out. You can get them for $20 or something. But during this hour, it'll be like 10 or 20 ticks out. You can get them for $20, like at the top of the hour on both of them. Because that part of that's built into the pricing. Okay, so it's not like you just get a big edge by trading the volatile versus the non-volatile times. Okay, so that's where using things like expected movement and stuff like that comes into place, for like when to enter each side of the trade or each leg of the butterfly or whatever. But this will let you know, like, let's say you're an Apex trader and you're trying to trade for trends. This would be something to look at to know when should I even expect there to be a trend to trade to catch a big move. I'll have traders hop in. They're trying to trade Apex at night. They're like, yeah, Apex just goes too slow for me at night, and I'm like, dude, Apex isn't going slow. The instrument is going slow. So it has nothing to do with Apex. It doesn't matter what system you use. Pick it. It's the the market's not moving. So, but it'll give you a really cool perspective. You can check out the DAX, and look at that. And it's got when it really opens up. It picks up pretty quick. 4 a.m. Boom, that's your biggest volume hour. It's the open of the DAX. Right there, that first big hour. And going. Then right there at the end, you get some good volume. So there's your best two trending hours. Biggest volatile hours. Is that consistent? Yeah, I can see a lot of consistency right there. Very fast, I can do an analysis and go, what are my best volatility hours on the DAX? Okay. And you can see where it's breaking out. A lot of times this expected range will be pushed higher and higher and higher because it keeps breaking out. So that blue arrow is like way above that orange arrow right there. So we had a lot more volume than expected. Right there. Remember, this is volume down here, so a lot more volume than expected. We expected like an average of 12,000. We had 22,000 contracts. Bet that was a nice trending morning. Okay, right there, same thing. Go in, let's look at today. Not bad. Now we blew out the second hour. We had some great volume. Okay. Oh, look at that. We also had a lot of movement. So, this is at 5 a.m. So we blew out the volume. We also blew out the range at the same time. Check this out. We didn't blow out the volume. Look at this. We didn't blow out the range. This is something that Danny's been talking about. We've been looking at, expected volume with expected movement. And that volume's exceeding, so is that movement on that hour. When that volume is not exceeding, usually that movement is not on that hour. So that would probably be the immediate application. We'll work on adding in the close to close, but that can really help you. Okay? So, so our first step is to teach you how to read the markets objectively to make the tools, this has got easier and easier. If you saw the expected range before, it was just high to low and it was like a line. It didn't show you all the stuff it does now. And yeah, so then eventually we'll add more and more pieces in to automate more and more of it. But there's always going to be a style aspect to trading. I don't care how much you automate. But if I can make that style objective style versus subjective style, then you can have confidence and be consistent in your rules. So, to move the panels, all you gotta do is click on an indicator. Like I just clicked on one, like see where those little black dots pop up? And then hold on to it. So I'm dragging it with my mouse. And then just drag it like to a middle. So I had to click on the indicator and then I had to like drag it to, here or below or above. And then it'll move the panel. But it makes it really easy to reorder stuff. It's pretty cool. Like I went like years without knowing that. And I saw him do it and I'm like, okay, how'd you do that? He's like, just click anywhere. And I'm like, no, it's not anywhere because I'm clicking anywhere and also getting it as an arrow. It's like flipping me off, It's like, no, click on the indicator. So, um, let's see. Okay, so that's expected range, high to low. Like I said, you can check out that whole min max thing if you want to. I personally have not yet been able to embrace it. It's an immediate application, but it's there for those who want to check it out. But the volume, definitely massive value. And appreciate Danny for putting in that request. That's been very helpful. And the close to close will definitely have value too. I'm sure that's going to be like a 1 minute fix. That ought to be really, really simple. And we'll get that up here the next day or so. add that piece on. Okay, Spike Striker. I know that Steve's been asking. So yes, Spike Striker. We've added that on. You don't really need the volume spike indicator anymore. I mean, it's just I just wouldn't use it, but you could if you wanted to, I guess. Um, but yeah, we could go over. We can look at really any chart you want to. Let's see here. Yeah, this is the Apex we were on. Okay, remember this earlier? We're talking about hey, we're up here at the top. Gotta give Ninja a second to hopefully catch up. There it goes. And I said we're at the expected range right here. We're also at one deviation, low to high, right here. Should I expect this apex to buy? Like, should I expect it to really go up? I said no. I said what will probably happen is I'll buy here, and I was like, and I bet I'll get stopped out right around here. And look, it came down, stopped out, apex reversed, and again, even on that apex, that's a reversal apex, so it's not an apex entry. Um, Pulls down, pulls back up. Now I get an apex, entry, but didn't get the MVP confirmation. And look at this, all this confluence is long. There's a lot of stuff I don't like about that trade. We have the range. We definitely have the range to move, but we don't have any real good confirmation going on there. But the big thing I want to highlight to you is I said don't buy here because we maxed out on our deviation down here, and we've hit our expectation of movement from low to high on the hour that we had. And it literally perfectly pulled back. Okay? So that also could be used as a potential place to do a premium collection. You may not have to wait till it gets to the top of the channel because you got the full movement. So top of the channel is in some ways more preferred. So we're doing a spike striker at the top of a deviation level. Okay, so now let's add on the spike striker. Spike striker basically is the volume spike like 10 times better. What it does for you is it will put alerts on the screen. It'll let you choose any amount of minutes. Now, I personally use 5, 10, and 15, but let's say you're a 4-hour trader. That's not going to do you a lot of good, so you could increase that. But you can add on as many as you want, okay? And you can change them for a minute. So you can make that, I don't know, 30, 60, 120, or you can make it 240, yeah, whatever you want it to. So you'll have more volume spikes on the smaller time frames than you want on larger time frames because one bar has to be double the size of the other bars. If you wanted to make it lower than that, you could, but you can change the size of the fonts and all that stuff now. Use the futures contract with FX. This actually will now look up. Now it will only work on currency pairs that basically are dollar based because they have liquidity in the futures contracts, like pound dollar, dollar yen, dollar CAD, dollar franc, euro dollar, Aussie dollar. Okay, they have a lot of liquidity, and you have to feed to them if you have CME. Okay, like through like CQG through AMP. The other ones, it's going to use tick volume. It's good. It's helpful. It's better. It's a lot better than nothing. Okay, it's not as good as having true futures volume, but you can only have true futures volume if there's actually futures volume. Not like 30 contracts a day. It's not going to help you. Okay, so what it will do, what's really cool, is if you have pound dollar up, it will pull the 6B futures for you without you having to go in and add multiple data series like we used to have to add like 3 data series. We had to have like for trading pound dollar and we wanted the pound dollar spike strikers, we had to add in like 3 6B charts with volume on them. We had to add on the volume spike to each one of them. Now you just pull it up, put it on, done. Okay, and it'll instantly in the background pull all, like if you put in pound dollar, it'll automatically pull 6B. It knows what to do. Okay. Um, and then you can change the font size and the marker size. If you want to make it bigger, and you can change the color. Okay, so we try to make all that stuff editable by you. Um, you can enable or disable alerts. So if you want the volume spikes on multiple charts, but you don't want to hear ding, 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 the stuff going off, you can turn it off on the other charts. Um, you can also say a high to low range. So before it can even kick in an alert, it'll still show it for you. Okay. But before it will announce an alert, like I have it set to don't tell me if it's not at least a deviation away. The reason I don't want that alert is because the only reason I really pay attention to the spikes tracker for a direct trade, now I like analyzing it all the time. That's why we left it on there. But I want to be notified when it's moved a deviation high to low, and I've got a volume spike. That's really like when I'm looking for a reversal. Okay. Um, so if I'm at a deviation level, like a one deviation move, and really within ideally a deviation distance. So, but I will go on here and let me see that. And then what this says is within 0.05 of a deviation level. Okay. So basically in this little range, this little deviation channel range, that's telling me don't like give me a spike in between every little stupid thing that happens. Okay. Only when I'm close to the deviation level. You can turn off the alerts on different levels if you want to, but I leave them on personally because if it goes up, like say one deviation and then back down one deviation, I want to be notified if it hits back down at settlement and I get a volume spike. Um, so let's look at it. Let's see what happens. And so this can be added confirmation. So I know this is a lot of little things, but it's sort of just, yeah, this is sort of a walkthrough step by step, teaching you how you can set stuff up, how it can be used, learning how to be patient, waiting on charts to load when you have 20 of them up and you're doing a webinar and recording at the same time. Start clicking on things and then it'll crash it, so you're just gonna leave it alone. All right, so right now we haven't seen any, and you're like, it's not working. Well, we didn't get any volume spikes within a one deviation high to low. Okay, if we go back, we can see them. Now I can add more. Okay, so let's go back. Let me show you this. I can add more. It's like right here, we have a one deviation high to low, and we got volume spikes. Now what you'll see is all these little bolts, these lightning bolts, they draw over every bar that includes the big volume spike bar. Okay, so the big bar that had the two little bars on each side, they'll draw over that. We're gonna add in like a little pipe, like which is the thing above your enter key, okay, to go to the third bar, that third bar that was like the low volume bar after the big spike, so you sort of know where the volume spike officially like launched. Because it can be a little confusing. Because really, 15 minutes, however long that was, is where that really popped up. So we're gonna add that one piece in um, on there. But what this is letting you see is where did the volume spike happen and where was it at a one deviation level, and not and then was it at a one deviation level? What we do is we actually put in an underline. So you'll see right here like how we underlined it because the volume spike happened when it was within one deviation high to low. Okay, so you'll notice that's when we got our reversal. Look right there. We'll just zoom in on this one to make it easier to see. So right here we got volume spike happening right in the deviation within 0.05 of the deviation. Because remember, this is the 10-minute bar. Okay, this is the 5-minute bar. Probably what happens this bar is a little bit slower, but right here we had a volume spike that the high of the volume spike was within the deviation, or the low of the volume spike was in the deviation zone, and yeah, pull it back. So there's a lot of ways to use that. We'll make more trainings on that for you. Same thing, like this was one bar. Okay, it's like if you're looking at 15-minute charts, all of this activity right here, that's a 15-minute bar. Okay, so this would be like the open, the low, the high, in the close. um, so like we got a volume spike, pulls back, magnet price, pulls back, magnet price, pulls back. So there's a lot of applications to it. We got one right here, big volume spike, doesn't pull back. So the thing just keeps running and running and running. So, uh, but it didn't technically happen until right there. And we never got a pullback on it. See, so that's one of the things we're always looking at. We're always looking for that pullback. We never got that pullback. So you could add them to deviation charts. Uh, Personally, so far, I'm more of a fan of looking at them on like 5-minute charts. Um, it's just a little clearer to me. But if you want to like just have that alert, I don't want you to get all caught up and being confused in what is like where did it happen, what happened, and what should I do with that now. And whereas the 5-minute chart's a lot more clean for volume spikes. Okay, and for the volume spike reversal strategy. But again, we're using the spike tracker now because it'll plot it on there. So what I do is I go over what of a 5-minute chart and then add on the spike tracker to it. And then I use that because I'll actually use that for my entries and all that stuff. It also gives me that contextual potential reversal. Then I'll go over here. So now we have the spike tracker on there, and you can also go in and on the spike tracker if you just want to make them like not have to move a deviation to fire off. Again, you can go in here and you can make it 0. Okay. And then look at that. And it'll underline it if that bar, part of that bar was within a deviation zone. So there's the deviation zone, part of that bar was in it. So it's underlined. Here's the 5-minute bar. So it's like right there on it. So underlined it. This one, the high of the bar was within the deviation zone. So it underlined it. And notice it's like 1, 2, and 3 bars on 5, 10, and 15 because it took 2 5-minute bars to make a 10-minute volume spike bar. It took 3 5-minute bars to make a 15-minute volume spike bar. And they're not underlined because they're not in the deviation zone. Any questions on that? Like a couple. Volume bars, I like to look at. I actually have like usually what you'll see me have a 5 and 10, like you see the MVP video. So I like to actually look at 10-minute bars and volume bars. That's as far as looking at just that volume by itself, and that's how I find like magnet prices, like really strong magnet prices. So if I ever want to choose like where the market's going and I want to choose an out of the money strike for it, that's what I use. So I'll go, okay, I've got a long, everything's confirming where everything's going to go, and I look at I look at expected range, I look at deviation. That lets me know like the expected range lets me know if I say, hey, it's going to go to this price. The expected range lets me know is that realistic to expect it to go to that price in this hour or in the next 2 hours or not. So it helps me pick my like volume helps me pick my expiration. Expected range or sorry, volume helps me pick volume magnet prices help me pick my strike. Expected range helps me pick my expiration. So I already have 60 minutes, so I don't need to. No, I need 10 minutes. Okay, so we'll go over here. And I really don't even need any indicators. I still want to see the bars. but I don't really need any indicators on it. And then I'll take these, I'll drag them like down here, and then I need to edit them. Just double click on them to edit them, it's a little easier. And I'll go say, hey, base these on the 10 a minute. So, okay. Then, just for a moment, I'll just get rid of everything else. And I'll back out and I'll find high volume bars. And I'll go, all right, obviously a high volume bar. What were the highs and lows of that bar? And I want to just start plotting some levels. Okay. Don't go back too far. Okay. Go back far enough as you need to get a level to target. Okay, here is another really high volume bar from this morning. Highs and lows there. That bar. Okay. The problem, I can't really target anything above us, right? Because we're like at highs. So there's really no high volume bar at the. And notice that there's no high volume bar at the high. Okay. Not a big magnet to pull that thing back up. I'm not saying there won't be one, but I can't really. It's going to be really difficult for me to have a higher target because there's no high volume bar because this is the high. This is the all time ever high. So I can't really even find a high volume bar. I mean, that's about as high as I get, which is half the size of a high volume bar. So if I was going to go short, okay, then I could go over here and we could grab. I don't know if it'll let me grab. It might. Yeah, it won't let me grab a drawing. That'd be nice if it did. Just let you grab the indicators for the time series. So then I could go in here, and this is where I'd add in like expected range channels. Let's say put it on the same as input series, and let's assign it to the 10 minutes. All right, and then let that pull up. So let's say I get a short on 1, 2, 3, 4, or on Apex, or whatever. This is where I expect the market. Like now, I definitely expect it to move. To like this little range right here. I mean, it's pretty small. We're talking like a 1 point range. Okay, these are the last two like high volume bars, and then I expect it to move down to here. I don't expect it to do it during this hour. So now I gotta go. Okay, well, if I don't expect it during this hour, what if I chose 120? Put it down here. So that's my expect. Like the Russell goes back down, that's where it's going. Okay, like it will hit that level. So now I just need to find a proper expectation of how much time it's going to take to get there. Now it says, hey, I want more time. Let that load up. And normally you wouldn't be doing this over and over and over and over again. You get it set up and you're good. I'm just flipping through a lot of things. Okay, so we're getting closer, but still don't expect it to move that distance in the next 2 hours. Okay? So let's add in another one. Make it bigger. Let's add in 180. I mean, you can throw in whatever you want. Okay? This is one of, I think, the hardest part, and this is why I'm actually really excited about this. The biggest challenge on trading out of the money binaries for myself and probably any of you, okay, has been having a proper expectation, not just a direction. Direction, that's it's not incredibly difficult, but it's hard enough as it is. But distance by a certain time, okay? So because it's not just the strike you got to pick, but it's also when it's going to get there. So let's say we want to say the market's going to go south. We're at the high. We don't think we're going to make new highs. Things going to go down. I could target 11, 76, and the earliest expiration that I would want would be 2:30 or after. Like that'd be the earliest I would want. So then I'd go over here to the binary scanner and I'm targeting right around 1176. Go here, go over to binary scanner. Okay, I want to look at Russell, and I want out of the monies, dailies, intradays. It's not Friday, so I don't need them. And I think it's going to take at least a couple hours to get there. All right, so now I just see basically the 4:15s. So there's no 3 o'clocks yet, right? There will be 3 o'clocks for another 30 minutes. So all I have are the 4:15s, and if I'm going to target 1178, which would, if I'm right, that's enough time for it to get there. And then I can go in, and again, we could look at other things for confirmation of direction. Okay, we got a short apex. Hey, there's a range there. I mean that definitely could, work for us. Um, And so that's how I would actually pick that strike. And that's how you would apply directional out of the money binaries to expected ranges by using that expected range of movement. So obviously there's a lot of ways to do it, but that puts you like right at 1178.9. This puts you all the way down to 1176. Let's double check that. Okay, there's 1176 for $85. Okay, so that's obviously a lot less risk. Doesn't sound like a lot, but I mean, $10 when you're looking at 25, that's like 40% less risk. So I can target when it hits there. Let's say if it does hit 1176, I can say what would happen if it got there and I closed when it got there. I could buy it back for about $53 and make $34, which is a 256% return between now and 4:15. So that's sort of how I'm starting to use it to help me with my out of the money binary selection, because it's not just the strike I got to pick, it's also the expiration I got to pick, which means I have to have a realistic expectation on the amount of time it's going to take to get there. And I may decide to go, a little higher. I may say, what, I'd rather, if I think it can get to 1176. Remember, that's the range. Now we only had it at 3 o'clock. We didn't have it all the way going to 4:15. I could have made it 4 hours. And so how much lower can it get? But that's really, as far as like me going, hey, if this market is going to go down, I would tell you that we really need to break through here, okay? Because this was high volume bar, so this will be the resistance area, and that's why we see like it keep bouncing off this level, okay? If the market can get back through 1180 with some volume, it's going down here, and it will hit 1176 today, okay? But it's gonna have. I will preempt all of that with it's gonna have to break through this with some volume. Um, And part of that I can see just by going back and looking and going, okay, our last high volume bar was like right here, and when all we've done is just oscillate a whole lot of nothing. So uh, there really hasn't been any major, and we're at the, I mean, we're at the highs, so it's not a big surprise. But that's where the market's going, right there, and we'll get there today if they can get through that 1180 barrier with volume. Yeah, the 1183.4 high is one deviation from today's low. Yep. So you even see that like right there in the deviation indicator. It shows you that little red line. So that's a deviation from the low to the high. That's what the red means from how far we retrace from the low. We're right there at one deviation. So, and we haven't got a 3-tick breakout here on this short, and all that stuff, and we have a BMX going on, which means we expect chop. There's a lot of things happening right now, but I'm more not so much giving you a trade call as I am saying, hey, this thing does break down. We decide to go with it. It's not gonna happen in an hour, okay? Um, Probably is not gonna happen in 2 hours. So we're probably looking at, I mean, this is 1 hour, maybe 1179 is about as far as we expect. And I don't even expect that now because we moved up some, right? So we moved up like a point. So I really got to sort of move all my expectations up a point to get that high to low, that actual range. And, but by the end of 3 hours, 4 hours, that's for 415 because, it's going to be a little bit wider. Then yeah, 1176, 1178 right there. Definite point. It's always going to pull back to those high volume magnet prices. I mean, over and over and over and over and over again. So you got to wait for that directional turn. But when that directional turn happens, like that's where it's going. And that ought to help you a lot in picking out of the money binary strikes. I don't use Spike Striker for out of the money binary strike selection. I use Spike Striker for in the money spike reversal trades. So the question that came is, can you go over an instance of Spike Striker with out of the money binaries on your chart? I don't do that. So Spike Striker is not for that purpose. Spike Striker means I expect a pullback over the next hour or so that should give me some time to collect some premium, but I won't be surprised if it comes back to that price as a trigger. So it's not really a reversal indicator. It's a mini reversal, like choppy indicator, which is very good for a premium collection trade. It's not good for an out of the money trade. That would be the really the wrong application of it. So you'd want to look at up here. Um, I'd want to see a one deviation high to low. In this case, I mean it worked out well, but it's not really the trade of preference. We go down here, we get our 5-minute volume spike reversal trade in the zone. Okay, and I mean this is like at 5, so between 5 and 7. You got another one like right there between like 6 and what was that, 6:30 and 7. Even if you went an hour out and 8, Okay, but I mean, we didn't really. I mean, we got some up movement, but it didn't really take off until later. Okay, and notice there's a bunch of volume spikes here that don't mean anything. They're not even in the zones. All right, so I mean, I'm aware of them. Like, see the spike, it pulls back, it goes back. So you literally, I mean, watch this. Like spike, okay, pulls back, and then it goes back up. This is a magnet trades. I've taught these before, but basically that's a magnet right there. Happened again. It'll happen again and again and again. That's why they're not really so much complete counter reversal trades, just volume spikes by themselves, because they will create a magnetic price that the market will pull back to. Right there, goes down. Look at that, comes back, hits it. We go over here, there, pulls back, come back, hits it. So this one, it did not come back and hit yet. So, but I also, I said we're probably gonna pull back down to about 1176. So I actually used the high volume spike bar um, to do that. I mean, right now, like I said, I have a BMX. So right here, we got BMXs. If you're an Apex trader, you know what that means. But basically, it means that it's a barely missed X. It got really close to making one. It did not make one. That usually is a choppy or a reversal indicator. So at that point, I would not be looking to take a short. If I am going to take a short, we already talked about, where am I going to go? I'm going to go towards 1170, 1178 zone from the chart we were looking at over here. And you don't, I mean, I hope you're not getting the impression you have to know and master everything I'm talking about right now. I'm literally just teaching you different ways to use the indicators, way to see things, answer questions. Thursdays are very open Q&A. Okay. Um, so yeah, so you got volume spike reversal trades, and that system. Now, again, use the spike tracker now because it's a lot easier. But that I teach on that system here under deviation level trading system. Okay, so check that out for that, and that teaches basically how to do the volume spike reversal trades. Um, but I don't really use the volume spikes because I expect a mini magnet like that volume spike to go right back to it. Okay, I don't really use it as a total reversal. Like I don't have faith in that to be a complete reversal. I think it will pull back. I think at some point it'll come back to that price, and probably more quickly than I would want if I was trying to do a out of the money trade. Um, and often when those happen, like I said, they don't happen fast enough for you to really take advantage of an out of the money trade. So I mean, like these, it did move. It called the direction, but I mean, we didn't really get the big out of the money move for much later. Um, on the out of the monies, I'm saying using something like MVP, maybe on a higher time frame, like 5-10 minutes, or on Apex bars, uh, and then or MVP reversals, whatever. Looking at your expected range to see how far do you expect it to go, but that's sort of, I guess, your third step. So first, get your long or short signal, okay? Second, find your levels on the 10-minute bars that are high volume, and that's by every market. And it's very visible. If you'll back out on your chart, it's not, I promise, it's not rocket science. That bar is obviously a high volume bar, okay? I mean, it doesn't take a genius to figure it out. And just look at the, high volume, and you'll sort of see. I mean, you can sort of like, you start looking at this. Okay, okay, those are high volume bars. And you can sort of like set this little range. You're like, okay, if it's for the Russell in 10 minutes, looks like about 5,800 or so is a high volume level. And you scroll back a certain point. Now you have to look at continuous eventually, but now you see all the these are the high volume bars. Okay, the ones above that level, that's what we're really. And some are 10,000. Those are really high volume bars. Okay, So right now, 5,800 is a high volume. So that's why I said it's relative. But I mean, we haven't had this massive high volume bars lately at all. But which is not a massive surprise. But you know, the lowest I would count a high volume bar would be 5,800. The highest I'd count, not there's no highest, but the best high volume bars are about 10,000. So on Russell right now, and just like I said, if you go back and shrink the chart and start looking, you'll see there's a lot more 10,000s than you think. You may go some days without them, but boom, 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 and those are that's where a bunch of trade action happens. That's where a bunch of orders are. The market is attracted to orders. That's the whole premise of Apex as well, is we're trading based on order flow. And as soon as you find those high volume bars, don't go plot 100 of them back either. Just go back and plot ones that are most recent to give you a target. Okay, so if you go plot 100, you're gonna have 1,000 lines on your chart. You're gonna be able to read it. So just go grab the last couple. And right now you can't find anything above it because we're at highs. But this is definitely my short trade right here. So on Russell. So if I'm gonna go short, if I'm gonna choose an out of the money, I'm gonna choose my strike based on the high volume bar. So right there. Put a high, and then I put a little marker at the low. I went and found the last one right here. This is about a 10,000 bar. And I put a high on that one and a low on that one. Grab the wrong thing. There we go. These pastels starting to look like an Easter egg here. All right. So 1176, 1181. Okay. They line up pretty close too. So there's a lot of price action in there. So the reality is, if it busts back through here, that it's going to go back down. I'd say extremely high. And so now you have two choices to make when you make that decision. Okay. Like, all right, I'm seeing some short lineups. I don't like the fact that I have a BMX, but I've also had all this expected range movement. I'm bumping up against highs over and over and over again. This is more of an advanced trade, or maybe you're looking at MVP starting to go short, depending upon what time frame you're looking at or whatever. And so you got to make a decision. What are you going to do? If I get in now, advantages. I can get it cheaper because it moves down. It can get more expensive. But as time goes by, it's also going to get cheaper. So, do you want to wait till you have that confirmation of it breaking below and then targeting about 4 points lower? Or do you want to go for it now? So that's more of a risk tolerance thing. I personally would rather wait till I have like a decent confirmation, an expectation or something. Maybe I hit my expected range on the way back up, from low to high, which we're pretty close to right now. And that could be okay, now I can go short on Apex. And I may go over here and I may look at, let's see, so we have one of them up. We've been switching charts around so much. Change that one to like our 4 or whatever. I think the 4 is still long. So yeah, what we're doing right now is we're trying to get the tools done, obviously, and been making a lot of progress on that. And then the next step is going to be to go in and we're going to work on incorporating it into. We're going to actually I got this whole new video plugin that's really sweet. That's going to allow us to actually make like modules and courses inside of it, and it'll track your progress and have like mini quizzes as you go through it. We can make them very specific, like how to set up Ninja, Ninja tips and tricks, Ninja troubleshooting, just for common things. Then have binaries, out of the money binaries, in the money binaries, out the money binaries, whatever. And then we can have MVP, and then we'll have indicator setups. And so yeah, we're going to be able to add all this stuff in, make it very modular, very trackable by you. So you're not like, have I watched this or have I not watched this, or am I rewatching something over and over again and wasting my time for 5 minutes of information? And so we're putting all that together. And then, yeah, we will work on, incorporating that into the signals. But obviously, part of the signals is the trading pit, which is where people are putting all this stuff together live anyway. So, and the elite trading room where people are putting it together. So, my biggest desire, obviously, is to help equip you to be able to do the trades yourself versus just follow. And, but yeah, we want to have more signals built exactly on this method. Yeah, so I'm waiting right now. I'm not going short yet, but that would, you know what my strike is. We already picked that up. You know what my target is. So right out here, 1176, 415s, starting to pull back. So if I go in, obviously we're not going to be on the webinar this long to be able to completely follow through on it. So you can do either 76s or 78s, and then simply click the button there. And so if you wanted to hop in that trade, like that would be the trade you'd hop into. So if I did like say 10 contracts on it, I really needed to break through that level. I don't like that it hasn't broken through it yet. We could just stay here all day long. So I'm still watching, but that's the contract. So yeah, it's a lot of new stuff at once because we're pumping so much stuff out over the R&D right now. But then it slows down. Trust me, like we're very close to slowing down on the R&D on the Apex stuff because we got a few more little bitty things like the multi, to add in. We're gonna clean up a couple little options inside of it. We're gonna then put all of our focus on 3.0. And while we're doing that, we'll be working on just refining, like how much of this stuff can we program, like to factor in, like maybe it doesn't give a signal for MVP long or short if you're near the high or low of the range, stuff like that, like as an option. So, but yeah, we'll work on adding more and more in, and just give us feedback, put stuff in there, post in the forum, post your successes, post what you're doing, post your challenges. Okay. Post post charts. Let me know. If somebody has a bad day and I see it, I try to go back and I follow up and I'm like, hey, if you had a bad day, I want to see your chart. I want to know, is there any way I can help you? So don't be a lone ranger. Don't try to do it on your own. Get feedback, and all that. But that's really that's the coverage for the day. So I know that was a lot. It's always a lot on Thursdays. But hopefully you learn some new tips and tricks on how to use the tools. You understand the tools a little bit better. And you can do it. But all right, I'm gonna wrap up. Got my show coming up here in a few minutes, and I gotta take a short break before then. All right, y'all have a great day.